Hello fellow chartists, welcome to my YouTube channel. I am the Chartist, and today we finally got some type of pullback from the S&P 500. We're going to talk about that, but first here's the flow sentiment. It's pretty bullish. It's filtered for only stocks for the overall market and 200k premiums or above, 69% into calls, 31% in the puts. So big money is still bullish overall in the market, okay? Now check it out here. I wrote this post on my Discord. This post was written, was not really a post. I think I was responding to a member here, but it was written back in March 16. I wrote, I always play level to level. However, when we get this breakout or breakdown of the triangle pattern, I think we get a multi-week, one-directional move. I was talking about that multi-month triangle pattern on the daily chart from January, okay? Now, we actually did get that multi-week one-directional move, okay? Now, to be honest with you, I didn't think it was going to be this one-directional, but I'm very glad to see that we got some cool down today, okay? So here was my plan. I wrote this at 8:26 a.m. Once again, SPY had another green day, 10 of the last 11 of the last trading days. Yesterday, my target was 462. SPY hit it and quickly ran out of strength, all right? You guys saw that at the end of the day. As soon as it hit 462, it dropped. My plan today, 458 to 459 is first support. Weak now, with 456 to 456.5 below. A back test of one of these support levels would be healthy and cool the RSI some. Upside targets are still in play, 462 to 464 to 465, as long as supports hold. I have support at 454 as well, and if that fails, we sell down to the 200-day moving average, okay? And I end up adding later here, I added another support level for the SPY. The support was 459.5 to the 460 zone, okay? So, I know that was a mouthful, but we just play it level to level, okay? For me to be bearish, I want to see a support loss. So, basically, first support was 459.5 to 460. If that's lost, we play it down to 458. If 458 is lost, we play it down to 456 to 456.5 zone as I posted here, okay? So, now we take a look at the 15-minute chart here, okay? SPY opened around here, all right, around 460.3, okay? And then it started moving up. It went as high as 461.19. I had my support here around, these are the blue lines. Okay, 459.5 to 460. That was the first support. And as you can see, when it went down to test it, those are some big red candles. When you see big red candles heading down to a support level, that's a sign that the selling pressure is not slowing down. You know, because in theory, we want to see a bounce off support. So we want to see the candles slow down a bit and get smaller as a sign that selling pressure is slowing down. That's a nice big bearish engulfing candle right down to support, and as you can see, it broke support. So what does the chartist always say? When we lose a support zone, we always wait for the back test, as some of you guys have heard of, back test and go, quote quote. All right, so we lost the level here, and then it started back testing. We had some rejections at first from 459.5, but apparently SPY needed some more back testing, and it ended up back testing the high, which is 460, the higher end of this zone that I have, which is at 460. Now, I do want to address something. Here's where it got a little tricky, okay? It's very important to understand concepts like false breakouts and false breakdowns. False breakouts are bearish, right? Because the breakout failed. And false breakdowns are bullish because the breakdown failed, okay? Now, this candle right here, 15-minute chart, 1230 candle. It actually closed at, where did it close at? 460 and 0.05 cents. So this candle right here, it actually, technically speaking, recaptured the 460 level. However, when you watch the next candle, remember, one close is not enough. We need to see follow through. When you see this next candle, it barely spent any time above 460, and it ended up closing at 459.9. So below the 460 level, okay? So you can also say this did not recapture. It failed to hold, or you can even look at it as a false breakout, okay? When it clears a resistant level, but then the next candle, it closed below that resistant level, it failed to break out, right? As you can see, this textbook technical analysis stuff, guys. Okay? Lost the 459.5 to 460 zone. Went all the way down and tested our 458 level. That's my orange line right here. Level to level. This is where I advise some of my members to take profit, or if they believe it'll go lower, set an in-profit stop loss. Okay? So, as I wrote in the Discord, right here, what was my next support below 458? It was 456 to 456.5 zone. And as you can see here, the low of this candle went all the way down to 456.47. So it got to the zone. All right. Got to the zone. All targets were hit today pretty much. Level to level, price action works, guys. All right. But as you can see at the end of the day, it recaptured and tried to backtest this bull flag, this pink bull flag, backtested it, recaptured it, and it also recaptured and closed above 458 level. Okay, so that was kind of a bullish close. Overall bearish day. So if you played the levels properly, which is short from resistant, right? In theory, should have been a pretty good day for you. Okay, no bias. We could play this both ways. And honestly, this pullback was very healthy for the SPY. As I mentioned earlier, you know, I predicted. I don't like to predict stuff because no one can predict stuff. But, you know, based on technical analysis, I figured that we would get a one-directional move after we broke out from this trend line. This is the triangle that I was talking about. Okay, but this multi-month trend line right here. I'll change the color to green. Okay, move this for now so we don't get confused. Okay, multi-month trend line broke out, and I figured we'd get a one-directional move for multi-week. You know, a couple weeks. That's multi-weeks. But I didn't think it was gonna be this crazy. Okay, but anyways, got some pullback today, right? Like I always say, you want to get bearish, do it from resistant, or the best one, even better, is wait for a support to be lost. Okay, most people, they want to call a top or time the top and try to make money off the first leg, which is very hard to do. I'd rather just make money off the second leg of the movement. So if it's gonna go down, I'd rather catch the second leg of the down movement. Less risk, you know, increase your probability of making money. You might not make as money per trade, but it decreases your probability of a losing trade. All right. So as you can see here, I got the 5-day moving average currently at 455.87. SPY didn't even come touch the 5-day moving average. Okay. And it still managed to close above 458, technically speaking. So while we did have a nice cool off because the RSI is pretty overbought on the daily chart, it's still looking pretty bullish, guys. So we're going to play it level by level. If we lose 458, I got some levels at 456. If we lose 456, we go back and test 454 to 453.5 zone. That's a 61.8 retracement, okay? And if we do go down and test there, bulls will have a shot to push it back up. But if it does fail, which would technically still be healthy, if it does fail, the 50% retracement level fail, I favor we go back and test the 200-day moving average. And I think at the 200-day moving average, if we back test that one more time, I think it will hold, and the bulls could possibly push it up to another leg higher from the 200-day moving average. Okay, now I always say don't predict and stuff, and right now it sounds like I'm predicting, but I'm just saying gotta play it level by level. If we lose that 50% retracement level, 453.5 to 454 zone, okay, we want to give it a zone because there's a lot of noise in the market. Okay, the levels are not always perfect, so you got to give it some room. Okay, if we lose that level, then I'll favor the 200-day moving average. Okay, but as of right now, 458 is still technically support. Below that is 456, possibly even the 5-day moving average, because 5-day moving average will move up by tomorrow. Like I said, it's at 455.87 now, so it'll possibly move up a little tomorrow to that 456 support level that I got. So area of confluence there, and like I said, below 456, 61 back down to the 61.8 retracement level at 453.5 to 454 zone. Okay, just play it level to level. Okay, that's the bearish scenario. If we lose a support, wait for the back test as resistant, wait for it to confirm another close, and then we're gonna, it should push down lower, okay? That's the bearish scenario. Use the support levels, okay? Wait for it to break. But if the support holds, 458 holds, because like I said in my Discord plan, I want to see these levels get back tested. It would be healthy, and they sure did got back tested today. And I said if it holds, I'm favoring 462, which was yesterday's high. And then if we can break 462, we can go test the 78.6 retracement level, okay, at 465. All right, but give it a zone, 464 to 465 zone, okay? So remember, below, so basically my equilibrium level for tomorrow is 458. Above 458, I'm bullish. Below 458, 456 is the next level down, and then the 61.8 retracement level, okay? All right, guys. So if you need, I think I repeated it a few times already, but if you need me to repeat it again, just, watch the video again, okay? But we're going to the VIX. As you can see with the VIX, SPY gave us a nice cool down today. Very healthy, but check out the VIX. It went up and tested. Now, it's not a red day from yesterday. It's still a red candle, right? But it's still an up day from yesterday's low, okay? But look, it went up and tested that 5-day moving average as a resistance. VIX did not recapture any critical levels. I just want to point that out. Remember, the VIX inverses the SPY. All right, if it goes up, most likely the SPY will go down. But if it's looking bearish, most likely the SPY is bullish. So for me to be a little more bullish on the VIX, it really needs to recapture or close above the 5-day moving average at least. The 5-day moving average is currently at 20.07 cents. All right. So it needs to close above that at the very least to look more bullish. All right. Because as of right now, it just back tested that 5-day moving average as a resistance. And for all we know, this is, it could push down. Because look at the tendencies of the price. All right. If you look at the tendencies of the price in a strong down move, it tends to like to treat the 5-day moving average as a resistant level a lot. Okay, and it did that today. So it's bearish tendencies. If it was bullish tendencies, it would, as you can see here, lots of bounces off the 5-day moving average. Okay, this is the power of the 5-day moving average that I talk about in my video where I explain how to trade like the chartist. Links in description below, guys. Anyways, so overall, VIX is still looking bullish. Looking bearish. For VIX to look bullish, it needs to recapture and clear the 5-day moving average. So a close above 20.07 at the very least, okay? So VIX looking bearish. SPY got a nice healthy pullback, but still managed to close and stay above its 5-day moving average and did not lose the 458 support. Okay, guys? So keep that in mind. QQQ, all right. So QQQ closed above the 200-day moving average yesterday, okay? But today it closed below. That is technically a false breakout. That is bearish, okay? But I'm going to give QQQ the benefit of the doubt for tomorrow because on March 28th, it cleared the 50% retracement level. And then the next day, yesterday, it cleared the 200-day moving average. So the 50% retracement level never actually got back tested as a support. So with that being said, the 5-day moving average is currently at 364.4 and the 50% retracement level is at 363.4. So that is obviously now my support zone. If QQQ, if it bases, I like to see, as if you're a bull, you like to see it just hold above that level and bounce and find some buying pressure from that level. Okay, because that's a critical level. However, if it loses the 50% retracement level at 363.4, that's bearish, and it could put 356 to 357 back in play, and then down here at 352.6 back in play. Okay, so keep that in mind. Just play it level to level. Watch that level. However, if it does recapture the 200-day moving average, because you know market makers, they like to play tricks on us. Push it down, push it up, push it down. They whipsaw our motion. So if you see the 200-day moving average clear tomorrow, it's currently at 368.83. If QQQ gets back above that and close above that, that is bullish. And that's a sign that it can go test the next critical resistance level, the 61.8 retracement level at 374.2. Here's the Dow Jones. It has an inside day candle over here. Okay, I'll close up on it. First of all, yesterday, Dow Jones finally cleared the 61.8 retracement level at 351.64. Today, it still showed some follow through by closing above that level for a second day in a row. Okay, so obviously that is a critical support level, but I do want to talk about how Dow Jones has his inside day candle right here. It's when the previous day candle engulfs the current day candle. All right, or some people call the previous day the mother day candle, while the current day candle is the child candle. Okay, because it's within the previous day candle. All right, so the way you trade this is you want to see the third candle, maybe even the fourth candle, break the mother candle. All right, the range of it is what I'm saying. So the high of the mother candle is 353.71. So if Dow Jones, that's a resistance level. If Dow Jones breaks that and closes above that, that's a bullish sign, and in favor more upside all the way up to 359.5 is my price target. All right. However, the low of the Mother Day candle is at 350.13. If we lose that, that's a support level. If we lose that, that's bearish. Keep in mind, it's area confluence. So if we do lose 350.13, we're also losing the 200-day moving average and the 5-day moving average. So that's a big sign for you to take a bearish position. Okay? Other than that, it's just chopping and consolidating. All right? Which is another version of cooling off. Basic. All right, guys. So, yeah, I got MU here, but I'm not talking about MU. We're going to talk about IWM. All right, IWM also in false breakout mode, okay? So, as you can see here, yesterday it closed and cleared the 38.2 retracement level at 209.7. Today it closed below that, also giving us it looking like a bearish engulfing candle. Not really, but it's a big body red candle. Doesn't look good. False breakout mode. 200-day moving, 5-day moving average acting as support right now. Currently at 27.46. All right. But if that level is lost, all right, not a good sign. I'm gonna go down in favor lower targets. I got some support here around 203 and then at 201.4. Below 201.4, possibly break down below this green trend line. All right, this is a down trend line, by the way. Okay, that's a down trend line. And if we break below 201.4, that's a false break of this down trend line. Okay, not a good sign. That will be very bearish. All right, so to be bullish again, IWM needs to recapture that level it lost today. The 38.2 retracement level at 209.7. If it recaptures that and closes above that, I'll be bullish. All right, got some resistance here around 213.4 and then 216.4. All right, that's IWM. Now, here is Apple. I usually look at the daily chart, but I'm still using my support resistance levels based on the daily chart. But this, I'm looking at the 1 hour chart. And as you can see, since mid-March, got a few touches here. Touch, 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 touch. And tested it today, this trend line. Okay, now if we go in a little closer, it's looking like it's breaking down a bit. All right. You can see here, starting to look weak. All right. Can Apple finally break this trend line since mid-March and give us a nice deeper pullback? We will see. Okay. For it to recapture though, needs to close above 178. All right. And keep in mind, this thing is sloping up. So as time go by, the resistance level will get a little higher. But as of right now, it needs to close above 178 to put upside targets in play. Okay. There's some resistance around 179.6s. But above that, we can possibly go back to all-time highs. Okay. Now, I do have the next support, 176 to 177 zone. All right, that's a critical support level, and so far it's showing some buying pressure, as you can see. But below 176 is when I'll be bearish. That's a critical support level. I will be more bearish if we lose that level and then we can head down to 174, and then possibly this yellow line is the resistant line of the bull flag. We could possibly back test it as a support and see if it'll hold. Okay, 168 to 169 zone. Below 168 is when I would turn bearish, because then it would be a false breakout. Okay, here's a daily chart just in case. All right. Oh, the lines aren't matching. There you go. You see the bull flag. Okay, so remember those levels. Tesla, I was also looking at the 1 hour chart. Very similar to Apple. It was breaking down a little bit today. All right, so it needs to get back above 1,098 to recapture this trend line since mid-March. Okay, and above 1,098 should put my 1128 target in play, and then 1151. Above 1150, I'll say 1150. Above 1150 would be very extremely bullish. That would be a breakout of a critical resistant line. All right, go to the daily chart here. Yeah, so it connects the November high to the January high, and possibly can we get a third touch? And if we break out, definitely bullish. 1244.72 is the next price target if we get the breakout. Okay, but let's see if we get some pullback. All right, so like I said, let me go back to the 1 hour chart. Okay, so there is some support around 1,073. If we lose that support, we can go back down and possibly test my 1,036.8 support. And if we lose that, 1,010, and then a big drop down to 972 support level is in play. Okay, so basically above 1,098, I'm bullish. 1128, 1150. Below 1,098, I'm bearish. Okay, got some support levels to the downside. All right, so Bitcoin finding some resistance at the 200-day moving average, as mentioned yesterday. But today is bouncing off the 5-day moving average, so it's good to calm down. Some basing is healthy. All right, so I like to see that 5-day moving average continue to hold at 46.6K, and if that fails, a critical support level, multi-year trend line at 45.4K. As long as that support holds, I favor more upside. 48.3K, and then above that, if it clears 53K, I'll switch back down to bearish if 45.4K fails as support. Okay, guys, so that is what I have for you guys today. I hope you guys found some value in this video. Hope you guys made some money, or at least growing your love and skills for price action technical analysis. And thank you guys so much for watching. Talk to you all soon.